Hello friends, welcome to the September edition of Monthly Viewpoints. Global equity markets are holding up despite the challenging macro backdrop. However, with the latest inflation data point in the US coming higher than anticipated, it is likely to lead to more aggressive rate hikes by the Fed, and we may witness bouts of volatility in the near term. While there are still some concerns regarding the global macro environment, India is in a relatively better position. Healthy domestic macro data, continuing FII and domestic flows, correction in Brent crude prices, and expected improvement in festive demand are key positives for Indian markets in the near term. Hence, Indian equity markets have outperformed global markets so far. However, post the recent rally, the Nifty trades at a 21 times one-year forward PE multiple, which is higher than the long-term average of around 18 times. Also, valuation of Indian equities is at a significant premium to other emerging markets, warranting some caution. Globally, higher than expected inflation print in the US, along with the likelihood of a prolonged standoff between Russia and Ukraine, might put some pressure on equity markets. We believe upside from here will be a function of stability in global and local macro conditions and continued earnings delivery versus expectations. Overall, we expect markets to remain in a range-bound phase in the near term until clarity emerges on global macro conditions. However, on a medium to long-term basis, we continue to remain constructive on Indian equities. We expect the Nifty earnings to grow at a 13 to 15% CAGR over the next 3 years. Overall, we believe Indian equity markets can give returns slightly below earnings CAGR over the next 3 years. As the economic recovery continues, we remain bullish on the domestic economy-facing sectors such as consumer discretionary, banks, real estate, capital goods, and industrials. In the current environment, it would be best for investors to keep their asset allocation close to median levels, continue their SIPs, and avoid taking big market direction calls. Investors can also tilt portfolios towards higher quality and more defensive assets, which could hold up better in the current environment. We provide a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।